Hello and welcome. You're listening to this video because you received and viewed a short video on loan modifications and how escrows work with the loan modification. Now, a lot of our clients, and we put this question out there because a lot of you are doing your own loan modifications, and we also have kits that help those of you who are doing your own modifications. But for the sake of this video, we want to discuss and clarify the escrows, because when you receive your final modification, there will be a table in the agreement that will show principal and interest, and then another column that will say escrows, and then for the first year. And then the following years, the escrows column will say to be determined or adjusted per year. Now, a lot of our clients get this modification and they say, wow, you know, my payment went down $400, but my escrows are $800 a month. How is that possible? Well, this is the reason it happens that way. If you didn't pay your taxes in 2009, maybe you didn't pay your taxes in 2008, and you let the bank pay it, because eventually the bank will pay it. Somebody will pay it if you don't. Or if you sell a house, the bank pays it in the sale, and that's how it works. Well, if you haven't paid your taxes in a couple of years, the bank fronted that money, or they will need to front it when they do the modification. Now, they used to take the unpaid taxes and put it in the principal balance and increase your balance. Well, the reason they almost have stopped that 100% is because there's so many people who didn't pay their taxes. If the bank puts that money they put out in their principal balance and just increase it, the banks aren't getting any returns for that from that money right away. So they're just coming out of pocket for these expenses. So what they're saying is this: no. There's so many of you that have defaulted on your taxes and even insurance. What we want you to do is pay us that back as soon as possible. So what happens? They will figure out what your property taxes are every year and your insurance, and that's the basis of your escrows. However, then they'll take the years you've missed in taxes and say, well, we paid this amount on your behalf, so we want it back in over the courses of a year or two. Typically, now they're doing it over a year. So what happens is, whatever they lend you, they divide it by 12 months, and they add it to your real escrows. So for the first year, that amount is higher than it seems. Now, they're not going to charge you interest on the money they front you, but they do want it back. That is the mystery of the escrows and why the escrows are so extravagant sometimes. Now, a word of caution, which we explain in other videos as well. When your escrows are too high, that may cause you to have your file denied. Now, this is typically important when your home insurance or hazard insurance is canceled or expires and you do not buy a new insurance, and therefore the bank places insurance on you. When that happens, the bank's insurance is almost always 200 to 300% higher than you would otherwise pay, mainly because it's a higher risk and the banks are not going to shop like you do. So, but that we explain that a bit more in another video. So as far as this escrows, I hope that explains it in case you do your own modification and receive this escrows payment that scare you. That's only typically for 1 year. You'll be good to go after that. So I hope that helps. You will get the rest of our videos with links through your email to help you with any other questions that you may have moving forward on your modification. So good luck to you.